Let's go ahead and review the tax mitigation tip of the month is qualified charitable distributions, or commonly known as QCDs. So what is a qualified charitable distribution? Well, it's an IRA withdrawal that is paid directly from your IRA to a qualified charity. So you're not going to take a withdrawal and then give the money to, let's say, your church. You would actually have the custodian make a check out directly from the IRA to that charity, and then you could give them the check, and that would qualify as the proper distribution. And while income tax is normally due on each traditional IRA distribution, the account owner does not need to pay taxes on the amount transferred to the charity. This is by far the most economical way to do a charitable gift out to a company, a charity that you have. And we do this all the time with our clients. And most of you watching this might say, yep, I do that. Well, this is something that we kind of strive for clients to use because it really reduces the taxes for them. And we have systems in place that will allow us to accommodate whatever method you want to be distributing to your charity. Let's go on to a little bit more detail. How do you meet the QCD requirements? Well, first of all, the IRA owner must be age 70 and a half or older. So this is not for everybody. Those who meet the age requirement can transfer up to $100,000 per year. Only IRA accounts are eligible. So if you have a 401k, a 403b, a simple, a SEP, you cannot do it from there. You would have to roll it over to an IRA before it would be eligible. Next, it must be made by December 31st each year. It's not like your contributions to your IRA or Roth IRA where you can wait all the way up to April 15th. This has to be done by December 31st of each year. You don't need to itemize your taxes in order to make an IRA charitable distribution. Matter of fact, it doesn't even come on the front page of your tax return. And then finally, you are not getting taxed on this money, so you do not get to count it as a charitable deduction. Now, the interesting thing here is with the new tax laws, you get, and I can't remember whether it's an extra $1,000 or $2,000 that you can actually write off as a charitable deduction,
right,
even if you don't itemize.
Correct.
So this is on top of that. This is in addition to.
Right. Just the only thing I'd like to add on that is you mentioned the $1,000 or $2,000 additional tax write-off you get. Do that with things, that you can give away like clothing or furniture. Do those kind of deductions to the Salvation Army, get the write-off, and then you do your QCD from your IRA. Absolutely. And you get the benefit from both of those.
Absolutely. That makes a lot of sense.